Hello everyone, welcome back to my YouTube channel. What a busy week. I spent a lot of time trading stocks and dealing with family things, but I did write down some important topics that I'm going to roll out the videos possibly in this weekend. But I still realize I haven't finished my February monthly income report for my investments. So let's get that out of the way first. So you may consider to subscribe and hit that notification bell so you won't miss those videos that I'm going to publish this weekend to help investors to stick their heads above the water. For those of you who are new to my channel, this channel is about easy wealth building. I'm a very active stock market trader and a long-term dividend stock investor. I use short-term trading profit to fund my long-term investment portfolios and then to support my family. I produce 2 to 3 videos each week to share my knowledge and experience in the stock market. If you want me to subscribe your back, if you have YouTube channel, please clearly indicate in the comment section because I may not receive notification from YouTube on time or sometimes not at all. Without any further ado, let's get started. In today's video, I will go over with you how I made those profits, both from E-Trade and then M1 Finance. I will mention the stats, what are the percentage of the profit were from the active income and then the others were from the passive income. I will also mention my mistakes and my thoughts on stock market in the short term. In February 2020, I made a total net profit about $21,442.96, of which 95% were from active income, which is from my trading stocks short term. And then about 5% of those incomes are from passive income, from dividends and then fully paid lending program. Dividends alone I got in February was about $858.07 from both E-Trade and M1 Finance. I made a majority of my money trading stocks in my taxable account with E-Trade. I have Roth IRA and then rollover account as well. So from taxable account, I made a total net profit about $19,136.34, mostly from short-term gains, a little bit from long-term gain. Total fees I paid was $42.54. I traded CME, DGAS, Disney, Drip, lots of Drip, Gilead, Google, mRNA, Netflix, Virgin Galactics, T-Mobile, Tesla, tons of Tesla, still Tesla. That's some mistakes I have to mention to everyone. I try to short Tesla, just few shares, try to practice, but it wasn't going my way, and I waited about 6 days, and then I have to sell it. I did not have confidence of holding. But that tells me I need a little patience, because if I did wait until the end of February, it will be a dramatic different story. I would have another 800 or even 1,000 more in my profit. So that's some lesson for anyone to learn, including myself. Although I don't have a crystal ball, sometimes you just have to trust yourself. So more Tesla, TVIX, and Zoom video. All right, so here's something I owe one of my YouTuber, Paul Vasquez. I hope I pronounced it right. Sorry, Paul. Yeah, he mentioned, I forgot to mention the leverage in the video that I made earlier, how to use other people's money to invest in the stock market. I forget to mention the leverage. I spent about $1.37 million in trading and received $1.391 million in return, and then These are my profits. Of course, I don't have the $1 million in my account. The magic here is that this is a margin account. Using the margin account, I can avoid the PDT rules. I can trade in and out of a stock round trips many times as long as I sell it. I do not borrow money in my margin account, but the margin account enables me to leverage my money to trade and then to make a lot of profit out of it. So Paul, if you are watching, this is for you. My second account with eTrade, I made about $1,206.37. This is a Roth IRA account, mostly from short-term gain and then a little bit from long-term. And then total fees I paid was $8.36. Roth IRA and rollover account, they don't allow margin. So I have to use my own money, and then I have to obey the PDT rule. Otherwise, I'll be on the bench for 3 months as a penalty. So I have to be very careful watching my trade amount and trade frequency. So I traded DGAS, DRIP, DWT, Microsoft, Roku, Virgin Galactics, Tesla. So those are the amount in, I spend those amount out. As the result, I sold it, and that's the total I made. This is my third account with eTrade rollover account. I only made $58.07. But the lesson I want to share with everyone here is this red mark. I lost $2.40 because I trade usually with market price. So for this one, I did not notice at that moment when I pressed the market sell button. I only noticed afterwards that they charge $1.50 in between, which means I have to make more than $1.50 for this trade in order to make money. So when I saw myself that account increased about $137 in green, so I was trying to sell, didn't notice that they charge that much in between. So in this trade, eTrade make a lot of money. I made red. So eTrade, you owe me a lot. $2.40 in red, which shouldn't be like that. But that's my lesson to learn. Sometimes I have to really pay attention at those dollars that they charge at the moment I press the button. This is the dividends that I made in February for my taxable account. Mainly it's from AT&T. Total is $579.54. For this account, the total in February was $615.71. As you can see, these greens are the dividend payouts. These blacks means they use the automatic drip program and then purchase the additional fraction of shares automatically for me whenever they pay out dividends, which I love the most. I don't have to lift a finger. It's automatically done for me. This is for my Roth IRA account. I don't have much dividend income, only $21.34. For my rollover account, I made only $22.50. Another totally passive income I earned from eTrade is from fully paid lending program. Roth IRA I made in February is about $112.77. From the rollover account I made is about $126.69. This is a fantastic paid program because you don't have to do anything, and then you just act like a bank. You share half and half with eTrade interests that charged from the borrower, and then you receive those income on daily basis. Now let's move to M1 Finance. I have also 3 accounts with M1 Finance: taxable, Roth IRA, and then traditional IRA account. From this taxable account, I total received in February, the dividends total is $54.86. You can see I received from CVS, DRI, GIS, Verizon, Texas Instrument, ABBV, Clorox Company, and also I received from LTC, SPHD, APO, Gain, Constellation Brands, and then Starbucks, Paychecks, Stags, and an O and an OHI. I also spent about $4,147.39 repurchase those shares that I'm holding in my portfolio at a taxable account with M1 Finance, regardless the market downturn. As you can see, from the 24th to the 28th, the worst stock market week, I also keep purchasing. And then I purchased on the 7th, 10th, 12th, 13th, 14th, 18th twice, 20th, 21st, 24th, 25th twice, 26th, and 28th. I was keep buying dollar cost averaging down. Whenever it's a red or a deep red, I purchase more. For my Roth IRA at M1, I received about $26.80 in dividends. As you can see, dividends from Gain, APO, STZ, Costco, Paychecks, Stag, Procter & Gamble, EPR, OHI, Apple, TXN, PNC, Verizon, DRI, and AT&T. Like my taxable account, I also spent about $4,122.68 purchasing those stocks in my portfolio in the Roth IRA account, purchased even during those market downturns, as you can see. Usually when I click the buy button for one account, I will click the buy button for all three accounts. For my traditional IRA account with M1, I received the most dividend in February, about $101.86, mostly from APO, and then from ABBV and also SPHD. I also spent about $4,356.86 in this February to repurchase the shares that in the traditional IRA account. As you can see, from the 3rd, 7th, 10th, 13th, 14th, 18th twice, 20th, 21st, 24th, 25th twice, 26th, and 28th. My total account value at M1 Finance as of March the 5th is about $101,380. Compared to the market high before the worst week, I think I lost about $8,000 in the market value. Of course, they are paper loss. I never sold anything. In this amount, I have still about 30% holding in cash. So I'm prepared myself to keep battling the market downtrend or sell-off. Right now, the professionals at Wall Street, they are saying the V-shaped recovery is not likable. Probably not even the U-shaped recovery. Probably we'll even look at the worst case scenario like L-shape. L-shape is like going down and then keep down. We don't know when gonna recover. As long as the coronavirus is still a threat to us. Just we have to keep investing, not panic sell, and then hopefully you will also have some fresh cash in hand so we can keep our accounts at a healthy averaging price. If you like today's video, please do not forget to subscribe, like, and comment, and share the video with whoever you think will be benefit from today's video. And also do not forget to smash that notification bell so you'll be the first one to know when my new video comes out. Thank you.